All right, so flood insurance.
Yeah.
Not exactly the most exciting topic, right?
Not exactly a beach read. But hey, that's why you sent us this ebook, 5 Things You Need to Know Before Buying Flood Insurance.
A great little guide.
Yeah, think of it as like our roadmap for today.
Absolutely. And what's great about this ebook, it's from 2 authors. They've got like a decade of experience helping people, navigate flood
About
insurance.
Rose. Oh, yeah.
They've got this one story, helped this homeowner slash their premium like $3,000 down to $300.
Wow. That's impressive, $300.
Yeah.
Okay, so our mission today is to extract the gems from this ebook.
The good stuff.
Yeah, help you make some smart choices,
Absolutely.
avoid some pitfalls, and hopefully, save some cash along the way.
Sounds good to me.
So let's dive right in. First up, wait periods.
Yeah. Wait periods. Always a bit of a surprise for folks.
Yeah, because you'd think, oh, I bought the policy, I'm covered. Right.
You'd hope so.
Not so fast.
Not always the case. So explain this to me. Like, I'm about to buy my dream house, but a hurricane is brewing offshore.
Okay, great example.
Yeah.
So if you've got a mortgage, most lenders, they're going to require flood insurance before you close.
Makes sense.
Now, under the NFIP, that's the National Flood Insurance Program, coverage for those loan closings, it starts right away.
Okay. Phew. That's good news.
That is good news.
But there's a but.
There's always a but, right?
Yeah.
So the payment for that policy, it has to be received by the insurance company before a claim will be paid out.
Oh, I see.
So back to your hurricane scenario.
Okay.
You close on your house, storm hits a week later, your payment hasn't gone through yet, you're in trouble.
Yikes.
Yeah.
So timing is everything.
It really is.
Okay, so what about, let's say, my area's just been remapped. Suddenly I'm in a higher risk zone.
Yeah, that's what we call a newly mapped policy.
Oh, okay.
Basically, FEMA, they've updated their flood maps. You're now in a higher risk zone. There's a 1-day waiting period before that coverage starts.
1 day.
Okay.
But wait a second. Isn't flood risk all about those zones, on the maps? I've heard this thing about risk rating 2.0. It's changed things, right?
Oh, you're right on top of things. Risk rating 2.0, that's a whole other ball game.
Right.
But essentially, FEMA is now looking at a lot more factors to figure out your risk.
Okay.
Your property's elevation, how close you are to water, even past claims.
Interesting.
All of that comes into play now.
So the zones, they're less important now.
Not completely gone, but yeah, less central to the whole pricing thing.
Okay, good to know. So let's say none of these special cases apply to me. Just a regular homeowner, first time getting flood insurance. What's the wait?
Okay, in that case, you're looking at the standard 30-day wait
3 days.
for NFIP policies.
Okay.
And here's the thing. If your payment's even a day late,
Oh, no.
that 30-day clock, it restarts.
Oh, wow. That's risky.
Yeah, so you could think you're covered, flash flood hits, and you're not.
Yeah, that's not a gamble I want to take. So don't procrastinate on those flood insurance payments.
Absolutely not.
Got it. Okay, what about private flood insurance, though? Same rules.
Well, for loan closings, they usually offer that immediate coverage, just like the NFIP.
Okay.
But for other situations, those wait periods can vary,
I see.
anywhere from 1 to 15 days. Depends on the company.
So it's worth shopping around.
Yeah, absolutely. Find an insurer that works with your timeline.
Right. It's like a whole other world.
It is.
Okay, so glad we're going through this ebook together.
Me too.
All right, so we've tackled wait periods. What's next?
Let's talk deductibles.
Okay.
This is where flood insurance gets a little bit tricky.
Oh, boy.
Unlike, your typical homeowner's policy,
Yeah.
flood insurance, you can have 3 separate deductibles.
3. That seems like a lot.
Yeah, you got one for the building itself, another for your belongings, and then a third one for additional living expenses. Yeah. If you have to evacuate.
Hotel stays, that kind of thing.
Exactly. Hotel stays, restaurant meals, all that. And here's the thing. Those deductibles, they can stack up.
Oh, no.
So let's say you've got all 3 deductibles set at $5,000.
$5,000 each. Okay.
Yeah, worst case scenario, flood damages your house, ruins your stuff, forces you out for a while.
Okay.
You're looking at $15,000 out of pocket before the insurance even kicks in.
Ouch. That's rough.
Yeah.
So the takeaway here, don't just look at the coverage amount.
Right.
Look at those deductibles.
Absolutely.
Okay. Any other surprises lurking in the deductible department?
Actually, yeah. The ebook points this out, that additional living expenses, or ALE for short,
Daily. Okay.
usually only covered by private insurers.
Oh, really?
Yeah, the NFIP, they don't offer that as part of their standard policies.
Interesting. So another point for private insurance there.
Mm-hmm.
Okay, it's fascinating how much there is to this.
Yeah, there's a lot.
And we're just scratching the surface. Right?
Oh, yeah, we're just getting started.
Okay, so the ebook also talks about getting your flood insurance policy approved by your lender.
Oh, yeah, that can be a whole other thing.
You'd think it would be straightforward, right? Yes or no?
You'd think so.
But
banks, they can be a bit picky.
really? Picky about flood insurance.
They've got their own rules, their own ways of looking at risk.
Right.
And sometimes they reject policies for reasons that seem, well, kind of strange.
Like what? Give me an example. I gotta know.
Okay, so the ebook, they tell this story about a homeowner in Vestavia, Alabama.
Okay.
They wanted replacement cost coverage. Basically, that means the insurance pays to rebuild their home to its current standards.
Seems reasonable.
You'd think so, right?
Yeah.
But their bank, they actually denied the policy
It's why?
because they thought the coverage is too high.
Denied for wanting too much coverage?
It happens.
That's wild.
It is.
Okay, so clearly you got to understand what your lender wants, and you need an insurance agent who knows how to, like, talk their language.
Yeah, absolutely. Someone who speaks both insurance and bank.
Right, a translator.
Exactly.
Okay, so any other common pitfalls when it comes to getting the bank's blessing?
Oh, yeah, FHA loans. Those are designed to help first-time buyers, people with, moderate incomes.
Yeah.
They often reject private flood insurance policies.
Oh, really?
Yeah.
Why is that?
They tend to favor the NFIP because it's backed by the federal government.
Oh, so it's a government thing.
Yeah, they've got their standards,
Okay, so if you're going the FHA route, your options might be limited.
They could be.
And that could mean higher premiums if you have to switch to an NFIP policy at the last minute.
Definitely something to keep in mind.
Yeah, moral of the story, tell your insurance agent what kind of loan you have up front.
Yes, early and often.
Right, no surprises.
Exactly.
All right, speaking of different types of insurance, let's talk about the NFIP versus private flood insurance.
Okay, good comparison.
We talked about how risk rating 2.0 has, shaken things up, made those flood zones less important for pricing.
Right.
But how else do these two types of insurance compare?
Well, one big thing the ebook highlights, over the past decade, private flood insurance has often been cheaper in high-risk areas.
Really? Cheaper?
It happens.
Huh, why is that?
It goes back to that whole risk rating 2.0 thing.
Right.
The NFIP, they used to rely a lot on flood zones for their pricing,
Yeah.
which meant people in high-risk zones, they were paying a premium even if their individual property wasn't that likely to flood.
Ah, I see.
Private insurers, though, they've always taken more of an individualized approach,
Okay.
factoring in things like elevation and property history.
So they were already doing what FEMA is doing now.
Kind of, yeah.
Interesting.
So in a lot of cases, they've been able to offer better prices for homeowners in those higher risk areas.
So it's not always a clear-cut choice, government versus private.
Nope. It really depends on your situation, your risk, your budget.
Right. So many factors. And this is where having a good insurance agent, someone who knows their stuff, really helps.
Absolutely. They can guide you through the maze.
Yeah, like a flood insurance Sherpa.
I like that.
Okay, so another interesting thing from the ebook, the NFIP, they charge a $250 surcharge for non-primary residences. Vacation homes, things like that.
Exactly.
Okay.
Most private insurers, they don't have that extra fee.
So if you're insuring a beach house or a cabin, that's something to keep in mind.
Definitely worth noting.
Wow, this is like a choose-your-own-adventure novel.
It is.
So many options, so many paths.
Yeah.
All right, what happens if you need to cancel your flood insurance policy before it expires?
The great escape.
Yeah.
It's not as easy as you might think.
Really?
Flood insurance, it's not like canceling your Netflix subscription.
Oh, okay.
Flood policies, they're very strict about midterm cancellations.
I see.
You can't just back out because you changed your mind.
Okay, so you're pretty much locked in.
Pretty much, unless you've got a really good reason.
So what are those good reasons? What are the valid excuses for breaking up with your flood insurance?
Well, the ebook mentions three main ones.
Okay, hit me.
Flood map changes, selling your property, and paying off your mortgage.
Okay, let's take those one by one.
Sure.
So flood map changes. What kind of change would justify a cancellation?
Usually, it's when your property goes from a high-risk zone to a low-risk zone.
So FEMA is basically saying you're not in danger anymore.
Something like that.
Okay.
But, and this is a big but, remember, even those low-risk areas, they can flood,
Yeah, that's true.
especially with heavy rain, overflowing rivers.
So it's not a guarantee that you're safe?
Nope, not at all.
Okay, so you really got to think it through.
Absolutely. Weigh the risks and benefits.
Okay, what about selling your property? How does cancellation work then?
Usually you'll need to provide a signed cancellation letter
Okay,
and a copy of your closing settlement.
right. Proof that you're no longer the owner.
Yeah, and don't forget that 30-day wait for a refund.
Right, we talked about that.
So a bit of a lag time, but it's a pretty straightforward process.
Okay, makes sense. Last scenario, you pay off your mortgage, freedom, right? No more flood insurance.
Well, not so fast. You'll still need to submit a signed cancellation letter.
Oh, really? Even though the loan's paid off?
Yeah, and you'll need a letter from your lender too.
Confirming that flood insurance is no longer required?
Exactly.
So even though you've paid off the loan, there's still some paperwork.
There is.
Okay, gotta dot those I's and cross those T's.
Always.
All right, well, we've covered a lot in this first part of our deep dive.
We have.
We tackled those wait periods, decoded those triple deductibles,
Tricky deductible.
and even explored the sometimes confusing world of bank approvals.
It's a journey.
It is. I'm starting to see why having this ebook and you as our guide is so valuable.
It's all about being informed, right?
Absolutely. Knowledge is power.
And we're just getting started.
Stay tuned for part 2 of our flood insurance deep dive, where we'll uncover even more insights from this ebook and help you make smart, informed choices about protecting your home.